This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
A U.S. threat to hit financial firms doing business with Russia with sanctions has chilled Turkish-Russian trade, disrupting or slowing some payments for both imported oil and Turkish exports, according to 7 sources familiar with the matter. The U.S. executive order in December did not explicitly target energy, but it has complicated some Turkish payments for Russian crude as well as Russian payments for a broader range of Turkish exports, the sources said. U.S. sanctions aim to reduce the Kremlin's revenue and disrupt its war in Ukraine without choking Russian oil flows to global markets, to avoid a politically sensitive jump in U.S. gasoline prices with President Joe Biden seeking re-election in November.
Oil prices were broadly steady on Tuesday, hovering close to 3-week highs on heightened Middle East tensions and recovering China demand. Brent futures ticked down 11 cents to $83.45 a barrel by 0413 GMT. U.S. West Texas Intermediate, WTI, crude for April delivery CC1 inched down 11 cents to $78.35 a barrel. The March WTI contract rose 36 cents to $79.55 a barrel as traders prepared for that contract to expire during the day. There was no settlement for WTI on Monday due to a U.S. public holiday.
Moving on to the top news in the energy sector.
Saudi Arabia's crude oil exports in December fell for the first time in 4 months. Data from the Joint Organizations Data Initiative, JODI, showed on Monday. Crude exports from the world's largest oil exporter fell 0.4% to 6.308 million barrels per day, BPD, down from 6.336 million barrels of oil per day in November. Monthly export figures are provided by Riyadh and other members of the OPEC to JODI, which publishes them on its website. Saudi's crude production rose to 8.944 million barrels of oil per day in December.
Australia's leading energy companies Woodside Energy and Santos are likely to report a steep drop in their annual earnings due to lower oil prices, while analysts expect the focus to be on the outlook and cost management. Oil and natural gas prices have fallen from 2023 highs as slowing global growth and a weaker than expected economic recovery in China weighed on demand. Majority of the energy sector will struggle due to low prices, with liquefied natural gas, LNG, demand being impacted by weak global industrial production. Mathan Somasundaram, CEO of Deep Data Analytics said, adding that Woodside and Santos were classic examples. Next, we have the top news in metal markets. Copper prices edged lower on Tuesday, pressured by a stronger U.S. dollar, while traders weighed demand prospects in top consumer China after the Lunar New Year break. Prices were briefly up after China cut the benchmark reference rate for mortgages at a monthly fixing as authorities ramped up efforts to stimulate credit demand and revive the property market. The 5-year loan prime rate, LPR, was lowered by 25 basis points to 3.95% from 4.20% previously, while the 1-year LPR was left unchanged at 3.45%. 3-month copper on the London Metal Exchange was down 0.2% at $8,415 per metric ton by 0357 GMT.
Iron ore futures fell for a second straight session on Tuesday, weighed by mounting concerns over demand outlook in top consumer China despite the country's latest move to revive its struggling property market. China lowered the 5-year loan prime rate, LPR, by 25 basis points to 3.95% from 4.20% previously, compared to a forecast of a cut of 5 to 15 bits per second in a Reuters poll. However, this was not enough to counter the broad and persistent weakness in the ferrous market. The most traded May iron ore on China's Dalian Commodity Exchange ended morning trade 3.64% lower at 926 yuan and 50 fen, $128.72 per metric ton, the lowest since January 18th.
We will now look at the top news in the agricultural sector.
Russian wheat export prices continued to fall last week amid weakening global prices and some growth in shipments, analysts said. The price of 12.5% protein Russian wheat scheduled for free on board FOB delivery late March to early was $219 a metric ton, down $5 from the previous week, the IKAR Agriculture Consultancy reported. The Sovcon Agriculture Consultancy pegged the same class of wheat at $218.224 a ton FOB, compared with $224.230 a week ago. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.